dive. We're talking a record low, the kind that makes you wonder if someone accidentally drilled a hole in the bottom of the ocean. US crude oil prices plummeted below $60 per barrel, a level not seen in years. That's right, cheaper gas might be on the horizon, but at what cost? This dramatic drop is enough to make even the savviest investor break out in a cold sweat. It's like watching your favorite sports team fumble the ball on the 1-yard line. You know something's gone terribly wrong, but you're not quite sure how it all went down. Well, buckle up, because we're about to break down this economic roller coaster. And trust us, it's a wild ride. The culprit? A perfect storm of global uncertainty, fueled by trade wars and a healthy dose of good old-fashioned economic anxiety. Let's talk tariffs, baby. Remember those things we learned about in history class? Yeah, they're back, and they're causing quite a stir. President Trump, in his infinite wisdom, has decided to slap some hefty tariffs on Chinese goods. We're talking a whopping 104% increase. Now you might be thinking, John, tariffs? That sounds about as exciting as watching paint dry. But hold your horses, because this is where things get interesting. China, not one to back down from a fight, has vowed to retaliate with tariffs of their own. It's a good old-fashioned economic showdown, folks, and the stakes couldn't be higher. This tit-for-tat tariff war has sent shockwaves through the global economy. Businesses are nervous, investors are jittery, and even your grandma who only invests in cat-themed bonds is starting to sweat. So, we've got plummeting oil prices and a trade war brewing. What else could possibly go wrong? Enter Helena Croft, an analyst at RBC Capital Markets, with a phrase that'll send shivers down your spine: toxic cocktail. No, she's not talking about a bad night out in Tijuana. She's referring to the lethal combination of recession fears and OPEC Plus' decision to increase oil production. It's like someone spiked the economic punch bowl with a double shot of bad news. The fear of a recession, fueled by these trade war tensions, has businesses and consumers alike tightening their belts. And when demand drops, guess what happens to oil prices? You guessed it, they plummet faster than a lead balloon in a wind tunnel. But wait, there's more. OPEC Plus, the cartel of oil-producing nations, decided now would be a fantastic time to boost production. It's like they saw the global economy teetering on the edge of a cliff and decided to give it a gentle nudge. The road ahead is about as clear as a mud puddle after a rainstorm. Nobody knows for sure what the future holds, but one thing's for certain: we're in for a bumpy ride. Some, like Treasury Secretary Scott Bessent, believe China is in a weaker position in this trade war. They argue that the trade imbalance between the US and China gives the US the upper hand. Others, however, fear that this trade war could spiral out of control, dragging the global economy down with it. So, what can you do in these uncertain times? Well, for starters, don't panic. Stay informed, buckle up, and maybe consider investing in some canned goods and bottled water. And while you're at it, why not hit that subscribe button, share this video with your friends, and give us a big thumbs up? It only takes a few seconds, and it helps us keep bringing you the news you need to know, even when it's about as fun as a root canal.